morning, everyone.
Morning.
So today we're having a bit of a chat about changing stock take cycles in hospitality. So for the last year or so, we've been noticing a trend with lots of clients, not just the bigger ones, actually moving away from the more traditional monthly stock take, moving towards quarterly and a focus on their own sort of internal systems. I think we've all got personal experience of clients who have asked us about this or have actually done it. So yeah, I'll just open it up. Who has any thoughts about this model, how it's affecting and where we think the industry is moving?
I think with the emergence of so many different stock systems that are integrated with till systems, it's becoming more accessible for venues, I think, to do their own stocks, whereas before it might not have been as easy for them to do it themselves.
Yeah, I mean, it's definitely easier to get a new till system, but yeah, that's actually interesting. What do we think's sort of driving it? Why do people go for moving towards internal or decreasing the frequency?
I was going to say more because of cost. I think they're looking more at cost, trying to streamline the business a bit more the way things are nowadays, and probably, I suppose, full sense of security as well is in there as well from my point of view, because they're going to go internal. Who's going to be doing stocks? It's going to be staff counting stocks and things like that. So there is a lot of debate around that as well. So yeah, I think cost is a big driver at the moment.
I agree, Askin. I think cost is the main factor. Obviously, with the industry as it is at the moment, everyone's looking at cost. Everyone's looking at saving costs where they can, and I completely understand the process of it. And there's nothing wrong with having a till system, a decent till system, an EPOS system in that. There's some fantastic systems out there. But what people don't factor in sometimes with the cost is the cost element of the internal staff's time to complete that, and also, do they have a skill level to do it?
Yeah.
It's all very well having a system in place that produces these figures for you, but you need that person with a skill set to be able to interpret those figures and obviously put action plans in place, off the back of the data that they provide. So
to stop it becoming a box tick exercise, they complete the stock, they check it off their Monday morning to-do list, for example, and then file it away with the rest of Monday's paperwork rather than looking at what they've produced.
Absolutely.
Yeah, I think, I mean, from my perspective, when we're talking about the skill level of it, there's two areas. There's the people actually conducting the count. So do they firstly know how to count? I think when we have a few clients where we compare our count to their last internal, and you can see that they don't know how to count kegs. We do it every day, so we're always going to be better at counting that kind of thing. But then there's also the issue of the people who are managing the system. So we've got systems we use a lot and we love them. And then we'll go to a client, they say they hate that system, but it's just because they don't have the skill set to maintain it. These stock systems, they require maintenance and to be kept up to date. So there's two areas where you can see that kind of skill deficit, especially after a few years when you've had high turnover of staff. Maybe someone's inherited a spreadsheet, maybe someone's inherited a way of doing things that isn't actually any longer valid. I think that's one of the big pitfalls for doing it internally. Yeah,
I think you're right, Ian. I think some of the sites that we've been recently where they have gone internal, just working off the back of the last manager's stock take to do an audit level, we're finding so many mistakes, and they're just basically covering up these mistakes by saying the quantity is the same when it isn't. So they're probably internally falsifying figures as well. So there is that grey area as well of, like you said, they're not stock takers, they're there to do a job. And yes, everyone's looking at cost, but there's probably a full sense of security as well in the long term.
Yeah, you've got to factor in the fact that with the skill set, it takes time to learn how to do this, to do stock taking properly. It does. I mean, for example, if we take somebody on as a new stock taker, we don't just throw them out in the field the following day and say, here you go, off you go and do a stock take. There's a training process. Is 3 to 6 months before somebody has got that skill set to be able to do the job properly, analyze the report, and know what to do with that information. It's You know, it is a skill that needs to be learned, and it takes time to do so.
Yeah, I think it's one of the things that I think, let's say that we had a client that had a super new 10 years in the future AI backed till system that took out the human factor of the accuracy of the stock takes, and a robot went around and did the counting. I think there's still an inherent value in the model that we work, is that because we go into so many different types of business and we work with so many different types of system, a good system will tell someone a variance, but it's that insight of understanding why that variance has happened, but also how to fix it. I remember when I was getting trained, I got asked, why do clients pay for stock taking? And you sort of think, oh, well, they want to know if anyone's stealing or anything. But at the foundational level, it's to make more money. And so not just in terms of telling people what's going on, but saying, like, here's some really good hints that have worked with 10 years of clients on how to make more profit, how to protect your business more.
Yeah, I would agree that the kind of the base of what we do is producing the result and producing whatever variance, GP margins, that the what you get from having an external stock taker and the expertise that comes with that is the constructive advice on where to improve. It's whether your bar manager who's done your accounts on a weekly or monthly basis internally, can they give that same insight on where to improve, is the bit that might be lacking.
Mm-hmm.
And also from an outside point of view, the stock taking is a, you know, it's independent. We've got no extra grind with anybody. You know, we go in there, we do the count, we do the job best as our ability with the information provided. So there's no reason for us to, you know, falsify results or do anything apart from produce what the reports are saying in front of us, really. So on that basis, it's impartial. That's the word I was looking for. It's impartial reporting is where that leads us into. So that's where most of our clients feed off that sort of information and reports that we're providing them to generate a better model for their businesses.
Yeah. If you're going to look into having some sort of bonus scheme based on stock results or have that built into your management package, it becomes a bit marking your own homework if that manager is then completing their own counts. So it gives you a more impartial way to reward or penalise based on stock results.
True.
Absolutely. I always think we have an awful lot of clients that have been with Venners for, you know, 10, 15, 20 years plus. And I always think those clients are not necessarily with us solely because they feel that they've got a problem. You know, their businesses are running really, really well. They have it as a peace of mind. And I think that's where, like you said, asking about it being impartial, about it being an external verification, that's where the peace of mind comes in for that client. Because then, Marianne, they don't have to worry about the fact that it's a bar manager. Yes, they could have bar managers doing weekly stocks, weekly line checks, you know, keeping on top of it on a daily basis. But then having that external check at the end of the month, the end of 2 months, the end of a quarter even, it still has that external, they know somebody's coming in without any bias to that site, and producing an accurate figure, which has got to be worth the money.
Yeah, definitely. I agree.
Yeah, I think that's one of the things that always makes me quite uncomfortable when people talk about quarterly stock takes, is that I think everyone in this call has got at least one story of the damage that one problem member of staff, a malicious actor, can do in a month, let alone 3 months. You know, we've seen frauds from 4 figures up to 6 figures in terms of the damage that if someone finds a gap in a profit protection, they can do some real damage. And if you're waiting 3 months, it might be too late.
Yeah, you lose your reaction time to that information, don't you?
Yeah, definitely.
Well, a lot of the time you could be going from 3 months, and then before you act on it, it's another 3 months. So in essence, you're not really tackling that problem till 6 months later. I think with any business where you have sort of high turnovers of staff within main key positions, then monthly is the way to go, because you know that you have only got a 4-week period before you get those figures. Because like you say, Ian, you know, if a site takes on a new member of management within a key position, and they're not what they're supposed to be, then 3 months is an awful long time. And we've seen it before where, you know, people can take advantage heavily within that sort of space of time. So, you know, I think the more frequent, the better, to be honest.
Yeah. Like there's been times where I've had inquiries for looking for quarterly basis based on, say, a lower revenue site. They're not looking for that same frequency, and that might be relevant or like adequate for them, but I would still always recommend an initial 3 months of monthly at the very least to then review, just to make sure that you might have a feeling or be confident that everything's fine.
Yeah.
But get that information first before making that decision, I would always recommend.
Absolutely. Yeah, absolutely. Because if you're looking at, you can quickly build up a history in 3 months. You've got, you can start to build trends and see patterns within 3 months. Whereas if you're only having them quarterly to start off with, you're already 3/4 of the way through the year before you have that same data as you would have within 3 months.
Yeah.
Sure.
So yeah, absolutely.
It makes sense, doesn't it? I mean, like to start monthly and then review it, because you're not bound by monthly, bi-monthly, quarterly. It's basically what suits your business. What is your model? What are you looking for from a stock taker's point of view? So you're right, Marianne. You know, we do the same. Start monthly, build up that pattern, and if they want to go to bi-monthly, we move it to bi-monthly and then go quarterly thereafter.
Yeah.
But,
but it's always best to make that decision based on actual data rather than a feeling of how your business is performing.
Without a doubt.
Yeah. I mean, we've had it before where we've taken on clients and started and they've set with, you know, fortnightly, or they've set with monthly, and they have a picture of how, you know, what the margin they're making, you know, their cost of sales, their highest selling products, all of that sort of data. They have an idea of what that is. But sometimes the actual picture of what comes out post stock take can be completely different, and it's an eye opener sometimes. But that's what that data is there for. It's there to give you that access to that data to be able to say, right, okay, I need to do this or I need to do that, or it could be that the business is running exactly where they need to be, and then the peace of mind comes in from it.
Yeah.